everyone, it's Tuesday and you're watching Within the Frame. I'm Kim Bo-kyung. After having fallen to below 3% for 2 consecutive months, South Korea's consumer prices rose 3.4% in August from a year earlier. Though the authorities say such a rise is temporary and inflation will be contained in October, there are still continuing worries. Many experts point specifically to the global uncertainties that are clouding Korea's economic prospects. Instability in China's economy and rising international oil prices due to reductions in petroleum production are expected to make economic recovery slow. How do experts see the current status quo, and what measures should be put in place to tackle such economic uncertainties? For more on this, we have invited Professor Yang Hee-dong from Ewha Womans University. Welcome, Professor Yang.
Hello.
Hello. And we also have Professor Shim Myung-gyu from Yonsei University. Professor Shim, good to see you.
Thank you for having me.
Thank you for being with us. Now, first question to our Professor Yang. So, South Korea's consumer prices rose 3.4% in August, which was the highest on-year rise since the 3.7% growth in April. Now, what were the reasons behind the rise?
Well, I can think about a couple of reasons behind this skyrocketed, the price increase. The first one is, well, every summer we have a heavy rain, and this heavy rain, push the increase of the prices of the vegetables. And the second reason is, we import most of the oil from the overseas, and for the last couple of the months, crude oils have increased almost 15%. For example, the Brent crude oil have increased by 15% to over $85 for the past 2 or 3 months. So those two reasons combine to push the consumer prices higher. And then the problem is whether these problems are resolved or will be resolved in a very short time. And I'm pretty much concerned that this trend will continue for a while in the next couple of months.
All right, I see. Well, as our Professor Yang already told us, Professor Shim, rising global oil prices seems to be one of the main reasons behind this increase in inflation. And amid such rising inflation, the government is reportedly considering raising electricity rates once again. Would it be proper to go for another hike?
Well, I think that it is really inevitable at this point to raise the power rates again because of the great losses by the Korea Electric Power Corporation, KPC, cannot be permanently allowed. In particular, the total debt of KPC was reported to exceed 200 trillion won last June, which is at the historically highest level. As other experts would also agree, I don't believe that this is a sustainable situation. The problem is that given that the weight on items such as electricity and the gas prices when measuring the CPI is non-negligible, so the surges in such items would pose additional challenge on the inflation rate. For instance, the inflation rate of electricity and the related items was 18% in August, which was much higher than the overall inflation rate of about 3%. Allowing higher utility bills would have much larger impacts on the inflation rate without any ambiguity. So summarizing, while it is expected to have additional positive shock on the inflation rate, I still think that the rates should be raised.
Right, I see. So the raise would be inevitable because of the debt. Now, Professor Yang, another aspect that we need to look at that is closely related to people's livelihoods is, of course, food prices. And the inflation rate for food prices at dining establishments rose by 5.3%, which is lower than in July, but still much higher than the overall consumer prices. First of all, why is this so? And for this, the government asked food companies to hold off on food price hikes to lower the prices for people. Now, what challenges are food firms facing, though?
Well, the Korean actually the Nongshim and Samyang, 2 major ramen manufacturers in Korea, they increased their ramen price last year over 11%. And this year also they tried to increase their prices, but the government told them to lower their prices. So last month, those 2 companies declared to lower their prices. by 4.5%. But still, they're doing a very good job with their financial statement. So my point here is, even though most of those food manufacturers import their raw material from the overseas, such as flour, but I mean, early this year, in the first quarter and second quarter, their financial statement says that they have some slack, right, to adjust these prices according to the consumer price, the index increasing in Korean market. So Korean government has recognized that the floor, the performance and profitability of those companies and asked them to lower the price. Still, though, those food manufacturers are facing with the tough situations because some countries have restricted their food export, and the economic uncertainties about the supply and demand for food and raw ingredients are still uncertain. It's very, very, very huge. And still we are suffering from a very weird weather situations. So all these issues combined, we still cannot throw away about uncertainties for future supply, the situation, bottleneck over in the food market.
Right, see, I see your point. Now, Professor Shim, we need to know that the 6-day break for the Chuseok holiday is coming soon. And for that, the government is trying to boost spending amid the sluggish domestic consumption. What measures have authorities planned out until now, and what more could be done?
Yes, the government would increase its spending to boost the domestic demand, which is in line with the classic policy suggestions by the Keynesian economics. One way it can create demand would be to distribute coupons that can be used only for consumption inside of Korea. It can also create demand by increasing income transfers to relatively poor households, because the marginal propensity to consume, which measures the changes in consumption for a given additional income, is known to be higher for them. And also, I think the government can give more efforts to attract foreigners to visit Korea, because there is a limitation to boost GDP only with additional domestic consumption. For instance, there can be more Chinese tourists because Chuseok is overlapped with the national holiday of China. But we should notice that there is a cautionary note here. While I also agree with the idea that it is necessary to boost the domestic demand for further growth, what I want to point out is that it would not be easy to handle the inflation rate with policy measures to increase aggregate demand.
Right, I see. So though efforts could be made, it would be hard to contain the inflation. Now, Professor Yang, staying on the inflation front, the central bank said inflation is expected to stabilize in October once temporary factors are eased. But even if that is true, many experts say people won't be able to feel this lowered inflation. Why is this so?
Well, the inflation and price levels are very much subjective and very sensitive to people's perception. Well, in this month, the Korean government has increased the prices of public services such as subways and bus and tax fees. So on this government, the recent effort actually casts a lot of concerns for people's perception about the future price indexes. And I also say still there are 4 major reasons remain very strong for the people's concerns over the future price increase. The first one is still the economic uncertainties in the global world has not dissolved yet. We still have the war between Russia and Ukraine that has caused the increases of the food ingredients and the food import. And as I already said, the crude oil has increased by 15% for the past 3 months. And some countries have restricted of their food export. And there is a very continuous tension between China and the United States for their semiconductors and automobiles, etc. And the second problem is weather problems. As I already said, a lot of countries have suffered a lot from this weird weather changes that had also realized in Korean, because in the last month we had the very heavy rain that pushed a lot of our vegetable prices. Number 3, price has a very strong persistence. Once prices increase, it's really rare to see the price return back to downward. So many people expect that this price will remain for a while or even further increase in the very near future. Number four, we see a lot of news in the media that the price will go up and all the global economy is in big troubles. So all these four issues will be combined together to make it very bad, and they aggravate the people's future perceptions, expectations about the price levels.
I see your point. Very interesting. Now, Professor Shim, I'd like to shift our gears a little bit here to the country's growth, because a hike in global oil prices could lead to an increase in inflation, as we have already said up until now, and of course, an increase in the key rate affecting the country's growth. So, for the second quarter, South Korea's economy grew by 0.6% on quarter, but experts say this is only because imports fell at a faster rate than exports. What does this hint at?
Let me first point out the exact number. Export has fallen by about 1%, while import has declined by about 4% than a year ago, which contributed to slightly positive growth rate. This might be actually not a good sign for South Korea. In a country like South Korea, which is heavily dependent on export, recession implies lower demand for intermediate goods imported from foreign countries, so the large drop in import implies that the Korean economy is not in the good shape. Maybe it's in the recession. So what we can extract from these numbers is that this is a negative signal on the Korean economy because the great decline of import has supported positive economic growth. And this is what we usually say as the recessionary trade surplus, which we usually believe that this is not that a good sign for the Korean economy, although the growth rate is positive.
Right, I see. Since you have already pointed out that we, South Korean economy, heavily depend on exports, I'd like to tap on exports as well. Professor Yang, the central bank said exports will be able to increase in the fourth quarter. Now, how are exports doing right now, although our Professor Shim already pointed out a little bit? And what are your expectations for the fourth quarter?
Well, so there exists some mixed expectations for the export performance across different industries. For example, first, IT industry may observe some very handsome increase because, we are living in the era of a big boost of AI and some electronics and many other semiconductors are very busy with creating new algorithms for the computer chips specialized for AI. And absolutely, this boom for AI may help boost up the lackluster demand for semiconductors. When it comes to the automobiles, still, in the United States market, the interest rate is pretty high and the economic situations are very unstable. So many people are pessimistic that American consumers may, increase their demand for the automobile. So expect that there is a slight increase, like a 0.2% increase for export to the global market. Number three, the shipbuilding. In the first half, we delayed our production due to the lack of labor forces, but lots of shipbuilders have successfully recruited the labor forces. So some very, positive and promising forecast says that we will observe about over 50% of increase in the export of the ships. Number three, still China declared they will decrease the production of the steels, and EU is very busy increasing their manufacturing facilities. So we expect a very handsome increase of the steel export, like over 3.5% to the global market. Finally, petroleums. Well, there's still oversupply, particularly in the Eastern Asian market. But due to the domestic increase and also the Chinese markets declaration to boost their domestic the economy, we expect that the petroleum export will increase slightly, like 1.9 or 1.8. So overall, I think the future expectations are pretty mixed up across different industries.
Right, I see. Mixed prospect. Now, Professor Shim, there are many other lingering concerns as well here. One is the strong U.S. dollar's rise, which is expected to continue until next year, if I'm correct. How this affects South Korea's economic recovery?
Yes, I also expect the strong dollar will be prolonged because the Fed will not change its stance very soon. Jerome Powell, the chairman of the Fed, hinted in the recent Jackson meeting that the Fed will increase the policy rate because the inflation rate in the US is still too high. But other countries, such as Korea, cannot easily follow the steps taken by the Fed because their actions are restricted by their current economic situations, which will sustain already high interest rate gap. Then the outlook for the current economy cannot be rosy for the following reasons. First, the historically largest interest rate gap between Korea and the US will eventually increase capital outflow from Korea. Second, already high interest rate in Korea will lower investment and also consumption. And also there is a risk associated with household debts. Third, the risk on the Korean won's value might increase, which is already reflected by the downward trend of foreign reserves by the Bank of Korea, which can potentially negatively affect the aggregate economy, as we have already experienced during the IMF crisis.
Right. So overall, it will negatively affect our economy. Now, we have been talking about the U.S. impact on South Korean economy. Let's talk about China's impact. Professor Yang, the weak Chinese economy is also cited as one of the reasons posing a threat to the Korean economy. And some say it could enter a so-called balance sheet recession. What is this? And how is China's slow economic recovery expected to affect South Korea in the long term?
Well, the balance sheet recession is an economic term that talks about the people want to keep the balance in their expansions and earnings. Well, if the economy is in the boost and they're very lenient in spending and investing with their monies in their pocket, but once the economy is in a very deep recession, and they come to think that, wow, why they need to reduce their expense or investment so they can keep the balance between earnings and expenses. So lots of people become very stingy in the expense, also with the investment. That is exactly is happening in Chinese market. So for the past long time, China and Chinese market has observed a very humongous increase in their asset values. And now the Chinese economy has been very stagnant for the past couple of years with very lower levels of growth rate. And that impacts on the import from Korean market because, we should keep in mind that China is the biggest export market from our perspective. And second problem is China is in many aspects in global market is competitor to Korean companies. So Chinese yuan has now become 7.25 per dollar, which is the weakest in the past 15 years. That means Chinese products have a price competitiveness against the Korean products. And besides, China is competing against Korean companies, not just for the end retail products, but also the middle tier products, which is a major export domain for Korean manufacturers. So for those two major reasons, in other words, as the demand market and as also the competitors in the global export market, I mean, this overall situation is in China has some very dark and gloomy forecast for Koreans manufacturers' future export expectation.
Right, I see. Well, based on what our experts said up until now, the South Korean economy does not seem to be facing a rosy future. And interestingly, an analysis from the Bank of Korea said that Germany is seeing similar economic difficulties. Is that right, Professor Shem?
Yeah, it was an interesting report, and the main reason why the BOK's report argues that the Korean economy and German economy would face similar difficulties is because both economies share similar economic characteristics, particularly the dependency on manufacturing industries in China. Compared to G7 countries whose contribution of the manufacturing industries to total value added is about 10%, that is about 30% for Korea and is about 20% for Germany. So both of them heavily depend on the manufacturing industries than other advanced economies. And as is well known, Chinese economy, in which both Korea and Germany heavily depend on, is now shaky, and both Korea and Germany will be negatively affected by the current situation of China. Also, speed of aging is also very high for both economies, which poses similar economic difficulties in many dimensions, including sustainability of the pension system and lower potential growth.
Right, I see. Now, we are running out of time, but I'd like to ask this last question to our Professor Yang. So given all these difficulties that we have heard until now, what kind of breakthrough is needed from the South Korean government to improve the economy?
Well, many people agree that we need to increase the value adds in the export items. I mean, for IT, shipbuilding, automobiles, or whatever. And lots of the companies need to invest a lot more to increase the value adds of their products, and Korean government needs to support with many different policies so that these companies can continue to increase the investment to increase their value. That is, I think, a key point for the future economic strategies.
All right, I see. And now, unfortunately, this is all the time we have for today's edition. But thank you, Professor Yang and Professor Shim, for your time and insights. We really appreciate it.
Thank you. Good evening.
Thank you. All right, that's all for Within the Frame tonight. We'll be back tomorrow with more in-depth stories. Thank you for watching, and goodbye.